I suggest we start with Anthony's presentation, but before Anthony starts, we're going to have a couple of questions. I'd like to have a simultaneous poll. The second question, this is the question which relates to makers. Then we're going to have the question for takers, and then for both takers and makers at the same time. Anthony, please take the floor.
Great, thank you. I hope you can hear me in the room.
Yes.
Can you hear me okay?
Yes, please continue.
I can't hear anyone. I'm assuming you can hear me. If someone could wave or put a thumbs up that they can hear me from the panel, maybe?
Посмотрите, что со звуком.
What's wrong with the sound?
Yes, please continue.
Okay. And can you see my screen?
Also, yes.
Excellent. Good. Great. Well, thank you for bearing with me from this distance from London. And I wish I could have been with you today. But obviously, with the COVID situation, it makes it more difficult, perhaps, than it would do normally. So thank you for the introductions. Good afternoon. My name is Anthony Belcher, and I look after the data business for ICE Data Services within the EMEA region. For those of you who don't know ICE Data Services, it's part of the Intercontinental Exchange Group, and we're a full-service end-to-end data and solutions provider, and especially for today, relevant within the low latency space. We've had a special focus on Russia, the Russian market over the past year, with an arrangement with a local provider, TR Data, that some of you may know, who has been representing us in Russia. And I think this is especially important given the current COVID times to be able to have people local in the marketplace. So today I just wanted to briefly talk to you about the algo trading space and data involvement around that. So just quickly in terms of what is algo trading and what do we mean there? Basically, it's event and rules-based trading and spans a number of different trading and investment activities across buy-side, sell-side, prop trading desks, and high-frequency traders. All the way from passive investing on the buy side, all the way through to low-latency arbitrage in the high-frequency trader space. By its very definition, data is the lifeblood of algo trading and is key to all of the parts of the life cycle. From hello?
Yes, please.
Sorry, I'm suddenly getting some feedback. Can you hear me okay still? Oh, okay, all right. In terms of the design and development phase, back testing and validation, and automation and execution. And within some of those parts, there are some pain points that people have today around the data and how they use that. So for example, within design and development, how do people involve and use things like alternative data, which has become increasingly important in the search for alpha, as well as ensuring that they have consistency across the different types of data that they might have or different dates of data. ICE Data Services has a high precision raw tick data historical data service, which helps firms be able to pinpoint and manage their development consistently, as well as a data vault, which has deep tick history of covering more than 600 sources globally. That then leads into backtesting and validation, where some of the pain points that we see are things such as lack of timestamps, how standard is the data, what does the history look like? And again, that's where some of our tick history and back data really helps firms be able to have that consistency and standardization of data to allow them to prepare and set up any sort of algorithms that they look at from that perspective. And then finally, that takes us into automation and execution. And there, some of the pain points we see are in terms of lack of normalized output, whether the infrastructure is consistent and resilient, and whether there is good connectivity into and out of the world's key exchanges. And that's where our services, such as our consolidated feed, which feeds into that tick history database I was talking about before, which has over 600 data sources streaming in a low latent fashion, and is fully normalized And that includes some premium FX spot and derivatives coverage from over 130 contributors and is used by many of our clients globally. Also within this space as well, we're now seeing more and higher demand for different asset classes. So for example, in the fixed income space, our continuous evaluated pricing, which is being used in the burgeoning trend of fixed income trading. And then we also have a global connectivity backbone that allows clients to be able to network directly into some of the world's largest exchanges. So over 150 exchanges globally, people have direct access to, not needing to use access via the internet. So much better resiliency and standardization there. So over the last few years, we've definitely been seeing a rising trend there about different parts of the trading space around technology and data. As I said earlier, we've definitely been seeing increases in data and different types of data. So depth of data has become more important. People have been looking beyond, level 1 through to level 2, now into level 3 in terms of order by order data. As I was saying, new asset classes are becoming more important. So beyond the traditional options, equity and FX, now into asset classes such as commodities or fixed income. And then the alt data piece I was telling you about before. So again, much more important there. So data is much more prevalent and available than it was previously. Also, we're seeing a large increase in computing power. So definitely the rise of AI and machine learning techniques, especially those techniques that are being used in a low latent environment. And then finally, we're seeing cloud as the main enabler in terms of providing significant access to large volumes and sets of data that firms traditionally might not even have been able to access or be able to look at on a traditional basis. So that gives just a brief overview of ICE Data Services, and what we're seeing in the algo space today. So with that, I'll hand it back over to our chair.
Ясно. Энтони, спасибо большое. Понятно,
Anthony, thank you very much. This is a very brief outlook on the products you have. But if you want, you can look at this in detail. Now I'd like to give the floor to Grigory. Last week, last Monday, exchange launched a new technology. For many, it was anticipated FIFO or FIFO, as you call it, for FX and stock markets. We don't have enough statistics as of today, but probably you have some initial results. Grigory, could you elaborate on that in brief? What happened? Good afternoon. A year ago, at the same summit, announced the launch, the development of the solution, which allows providing for order book delivery to the core of trading system based on the order broadband, so-called first in, first out principle. The point is that the current technologies operating today are performing the sort of way that the orders can be delivered through different channels, each of which has kind of a strategic watering. Therefore, two simultaneous orders can intermix. Even the order which is sent a bit later by the competitor might outperform the other one. So we tried to avoid this kind of phenomenon with those level of precision which we might have with the current solution. In fact, it means that if before the uncertainty about the response time for a client to a particular market event, the delivery uncertainty was about 5 microseconds. So the orders sent within the 5 microseconds interval might have mixed in uncertain manner. Right now, it is boiled down to around 100 nanoseconds. From our perspective, it gives the incentive for those clients aimed at speed of making decisions to develop their technologies and to reduce the time of response. So it will have a kind of solution. This technology might be very interesting for both for market makers and market takers as well. So the utilization period is around 1 week. We don't have any statistical outcome results as of today, but overall, we haven't heard any negative feedback on that. So the technology is evolving, the interest is high. We've switched around 20 trading links, a new network infrastructure, and we have around 70 identifiers trading on two markets, on FX and stock market. But we need to wait around a month for the first tangible results. So, and we're going to publish it in the share of volume, in the form of the share volume. Thank you very much for your input. Can you announce for our next summit next year, when the market participants together with exchange discuss these technologies, we often refer to the experience of Eurex. And Eurex, for the rest of the world, might be a kind of a benchmark in this technology. How do you think? Maybe in a year perspective, are the market participants, not only in Russia, but globally, will they be able to refer to the experience and technologies that Moscow Exchange adopted? Do you have any plans for things that you have done to be a vivid example and best in the class? We will do our utmost to this end. So far, it's difficult to say. Eurex has gone through 2 years period path of very precise fine-tuning of the technologies through new network facilitators. We do have some room for development. There is another CME trading platform which uses FIFO gateway. I'm not sure about their statistics. Unlike Eurex, they do not have detailed reports on their statistics twice a year. Are you going to follow the way of information disclosure as Eurex does? We don't know yet. This is a question rather commercial rather than of an engineer nature. I might disclose all the information, but it might not be that useful. Can we have our next question for takers? And we have another presentation by Gleb, Raiffeisen. As some of them say, funny figures, funny pictures, as they say. Good afternoon, dear colleagues. I'm sorry I cannot see you in person. I'd like to demonstrate some slides. I'm going to share my screen right now. Yeah, we can see that. I've been thinking what would be interesting for you is going to reveal some details of our own developments, and they might be of interest to our colleagues. So we decided to work with the following question: how the crisis 2020 was better or worse compared with the previous ones? All the metrics we are going to present, they are going to be relatively important. The precision of measurement, please do not criticize that, but look at the relative perspective. The analysis is based on the days, the worst days in the history, and then the continuous perspective through the days in a row. So what do we have here? The biggest daily volatility, 2014, annualized about 140%. A median metrics averaged 500K, around 40 kopecks. A lot of MySix arbitrage to EBS. And a kind of standardized metrics spread by volatility and spread by wild volatility. Let's go through historic prospects on the most volatile days of each year. We know that every 2 years there is a big volatility for the ruble. It's one of the most volatile days of 2015. 150 annualized, the biggest spread, but the most interesting thing we need to look at is kind of volatility, spread by volatility metrics. How narrower the spread is. You can simply see that in worst cases, we started 2014, 0.28. Sorry for some technical issues. 2016, around 0.26 with the same volatility. So you can see the spread is narrower. I would like to apologize for my technical issues. 2018, even narrower metrics. The general idea is that in worst cases, in worst daily cases in our market, the biggest problems faced, the metrics is improving step by step. So there is no big problem of liquidity, actually. What do I want to say by implying that? So the problems connected with liquidity are natural continuation of big volatility on the market. But in those terms of volatility, and on the worst days it was 50 annualized %, the situation is improving year by year. 2019 was very calm. We faced 2020, very volatile day with a big trend, the 18th of March. The figures are almost the same on average. We have just a higher low metrics spread, but it was not a very extraordinary day. Volatility is great around the world. You pay a lot of spread, but the market is shifting a lot. The most interesting thing and the biggest problem which I saw is a problem which occurred 16:20 UTC, 19:20 Moscow time, when we faced kind of regulatory constraints, after which MySex ceased to be the source of liquidity. The topic EBS was the only source of liquidity, and evidently the spreads in EBS, even the on average, it shifts 0.5 rubles, even ruble. Those were just flashing pricing, but it was an unhealthy situation. In bad days, we moved on the best, the better. They have EBS, MySex access, but the regulation, which switched off the order book on the exchange, led to the situation. Then for a couple of hours, the situation was absolutely chaotic. So interestingly enough, that on average, this matrix is growing, in fact. On worst days, it's going down. On average, it's going up. You can explain that by things like OTC trading. People don't have enough manual orders on the exchange, so the average spread at the same level of volatility is growing a little bit year on year, in big shifts, particularly from 2015 to 2016.
And if you take 2018 and 2019, I don't know if you can see that. I hope you can. But interestingly, the main thesis here is that the main point here is that except for the regulatory impact, which switched off the MySex order book, so even the scale of the spreads is incomparable for the 3 or 4 hours. So the question is probably to the participants and to the exchange whether we are okay with the situation, and maybe to some it was about operational risks, and we need to think about this for our future plans. Volatility periods do happen and will happen. Well, thank you for your question, and the obvious answer is that it is not okay. Vadim, Dmitry, Grigory. Grigory probably I wouldn't ask because you are the organizer of trading. Well, I cannot vouch for the whole of the bank because it's a big institution or many institutions under one umbrella. But in my team, we never had any challenges, problems with that because we are linked to a number of sources of liquidity and, even putting one such source offline, like the Moscow exchange, did not stop our operations. Those who are more or less heavily linked to exchange data might have had some problems. But if you take trading, regular trading or e-trading, then it did not create major problems there. Dmitry, thank you, Gleb, for those funny slides. As always, those were fun to see. We never had any challenges there. Or any market maker, you know that everything has a price. But also we have VTB, Raiffeisen and Sberbank, and everyone else behind me on the whiteboard. They are all trading in the exchange. Also 500,000 of the private individuals trading there using the normal exchange rates. But it was not so. It was a lot of arbitrage costs, and many were selling at cut-off ticks, although the market was moving on. It's a big question to the regulator and to the Moscow exchange about the question about social responsibility, which requires socially responsible behavior. And what happened probably runs counter to what happened. So we're coming to what is fair play. Gleb, how would you answer your own question in this case?
У нас спикеры остались?
Well, I would say that generally it is not only a problem that we don't have liquidity providers. People were selling and were trading, but if we are claiming to move to a market which is becoming better and better, and situations like this, when liquidity origination and pricing goes to VBS, should not happen. If we allow such rules, then you should not be claiming afterwards that liquidity goes to London and how did this happen. So this is something to think about for the regulator. We are trading, but the spread of the public market is challenging. Perhaps I should complement to what Gleb said. What is the problem of EBS, of Moscow Exchange, or of any other exchange or any aggregate? There's a big difference between Moscow Exchange and EBS, and this is in line with our discussion. This is the fair access. At the Moscow Exchange, thanks to the central counterparty, there's equal access through brokers, and the prices are the same. For EBS is not a Moscow exchange. They don't have a central counterparty, but it is bilateral credit, and because of the credit risk, credit limits were cut by Russian banks, and that was the origin of the problem. So if we come to a problem when Moscow exchange sees a collapse and liquidity goes to EBS, but clients still need to have good credit or setup, which is quite expensive, and it would not probably work in the times of stress, like 2014 demonstrated that credit limits is something that costs money, and a lot of money. We cannot accept that for a given. Well, my views, probably just some thoughts of that. Really, I don't remember what happened on March 18. Some problem that caused the suspension of trading at the Moscow exchange. As all this discussion leads me to claim that this is more or less like advertising or promotion of Moscow exchange. Yes, we actually dropped it that day, but what happened afterwards shows that Moscow exchange is important for the Russian FX market. And indeed, ruble pricing is located in Moscow. And it is very important to preserve this because, for example, if you take the European currency, the pricing is done not in Europe but in London. The Japanese yen pricing is done in the States or in London. The ruble still has some uniqueness about it because the pricing for ruble is done at Moscow exchange in Russia, and we need to preserve this at whatever cost. Such cases demonstrate the fact that indeed pricing is here, but if it happens regularly, such collapses happen regularly, then this pricing would be shifting elsewhere, which is not good. Another question, as this discussion point, is fair play. But to do that, to discuss that, although we don't have too much time, let's just all of us, starting with Grigory, provide a definition of what is fair play. How do you understand fair play? I mean, in the financial market. Again, in terms of course, electronic algo trading, I would say that equal opportunities for the equal desire of clients to reach success, I mean, technologically speaking, of course. That's a lack of clubs and closed non-public stories. Everything should have a price. There's a club, there's an entry ticket, you pay it, and you actually go into the club without somebody deciding whether to admit you or not. Nice to hear this from a major bank. Fair play, in my mind, is clearly formulated rules and compliance with such rules. There should be some guarantor that would make sure that the rules are complied with. Who can be such a guarantor in our case? Well, Moscow Exchange is the primary candidate for that because the rules there are quite clear and published. And I don't think that anybody would suspect that Moscow Exchange would have some preferences, non-public preferences to certain participants. And the OTC market, this is quite often.
Anthony, what do you think? What is fair play from your point of view?
Yeah, I mean, I think fair play from our perspective as a data provider is about providing that consistent, normalized access to the markets and being able to see and understand what's going on in those markets at a consistent, standard fashion, delivered at the same speed and the same access to providers in the marketplace. So again, I think it's what people have been speaking about before. It's about making sure that people have that equal opportunity to access the markets.
Okay, thank you. Gleb, на твой взгляд.
Gleb, what do you think? I think that fair play is about everyone competing on the basis of logic and a model, not speed. And so, even as such participants would have some easygoing in the exchange, even in the types of transactions that we are interested in, like swaps, for example. So we'll argue about this face-to-face later. In the Russian financial market, of course, it is split into derivatives, currencies, and stocks, but in the FX market, do we have fair play in Russia in this market? Well, nobody is perfect, but we, I think, did a lot in past years to make sure that we have equal access to market data. We have a certain mechanism and channel to deliver such information and data to almost everyone on equal footing, and we make sure that there are equal opportunities of access to our trading services for those who can pay for that, and also such services are available on equal grounds in terms of time, etc. But sometimes those who are slower than speed bumps can be outside this general paradigm. What? Maybe you can launch another question about the maker and taker, but so far we are listening to our panelists. I think that, generally speaking, in Russia it is quite a fair play situation. Everything is open. It's just in terms of the volume of investment, there's some difference there. I think that even the FX market, the Russian FX market, cannot be seen as a single whole because it is fragmented into niche markets which never overlap. And for example, we trade with some non-residents in London, and they don't have access to Moscow exchange. And they have a totally separate world of their own. Or trading with corporates, this client business is quite different in that case, and is very much different from the public order books. Rules that are set by the Moscow exchange, but in all those niche markets, there are like different stories with fair play. The worst case scenario is in the interbank market and OTC. The best case scenario is where rules are published and complied with at this Moscow exchange. And it is, well, I mean, it just doesn't matter what rules there are, but it's just that they are uniform for all.
Not about Russia market, but about global market. What do you think about fair play on a fixed global market?
Yeah, I mean, I think from a global perspective, that's where providers such as ICE is able to kind of help participants globally gain access to markets across the world. And I think a lot of that of what we're seeing at the moment is that kind of almost democratization of data and the ability to be able to access markets that historically people wouldn't have been able to do because of inability to be able to connect to or gain understanding of those markets. And I think that's what we're seeing a lot more of these days is more data delivered faster and data delivered in a more standardized fashion.
Thank you. Gleb, твое мнение?
Gleb, what do you think? Well,
извини, можно я за тебя отвечу?
The public market. So OTC I would not comment, but if you take the public market, then a simple example, EBS quoting is subject to a participant from Chicago to have such information and act faster, and you would be losing more money. And this makes you to have the same infrastructure as the best participant worldwide, which is not fair to trade in a local asset. But an EBS is a very important source of information for the ruble. So, but taking the Intercontinental setup and the nature of exchanges, I don't think that here you can actually have the full fair play. Strange that a Raiffeisenbank representative would be claiming that. Cannot you afford yourself such an infrastructure? You are the only one who claims that there is no fair play in the market. But you have, of course, your own idea about the market. Now, if possible, I'm asking our organizers, would you demonstrate the results of the three polls that we had? The first poll, who is the maker? Unfortunately, we had not too many answers, but the first is Speedbump, which is quite understandable for makers. This is a very comfortable tool to use. The next question was about takers. Now here, there's a split in the top rating of FIFO and Speedbump, which, no, FIFO still comes first, which is more natural. And third, the most difficult question, we are not only makers, but also takers. And as a rule, that's the picture that we have. It is changing, but Speedbump, strange as it may seem, is also taking the pride of place. Now, let's launch the question that we had first with many options. You can choose several options here. And Vadim, if you may, would you please comment on this poll? What was the idea that you wanted to convey to us? Well, my thought was that the market is fragmented, and for each market niche there would be some good rules, but it does not mean that when we create some rules, we won't find a niche for it. And the Speedbump order books that we have at Moscow Exchange were quite difficult to be used by myself, for example, and by my team. We're not giving any traffic there, but those are quite difficult to be used. That's our experience. That's why I asked that question, to see how the market perceives those order books. That's the first attempt, I think, in the Russian market to use Speedbump technology in Russia. I believe that there are a number of deficiencies behind this technology which prevents its broad usage, given our specifics. Let's just see online what do we have. So I would ask the audience to be more active and proactive in providing their responses. And so if you have some experience or understanding of the technologies or information about what they are about, how they work, please provide your answer. And I also would like to ask Dmitry to comment on the following. It was a surprise to me to hear from many Sberbank representatives here the words about algos and algo orders. So what is this new trend about? Where are you going with this? Well, I'm surprised that you were surprised with this. Well, I mean, you never mentioned that before, at least that much. Alexander, during panel 1, said that before you give something to your client, you need to test it on yourself. We are fresh in this market, and it was surprising that our EFX market has been around for quite some time, and we were surprised to see that clients are not using algos too much, and they are only now reaching the clients. It means that probably different clients need different products, and different clients have different needs. We were talking about market impacts, but say a client who wants to sell $500 million still need to have a market impact and close down the risks, buy a company, etc. So the market impact is not something that such a client would need at all. He's happy about this situation.
The more sophisticated the client is, the more attention he pays to transparency. So this transparency is important. When trader gives a price, the price is bad. If you look at OTC or EFX market, the prices for 50 million on voice market is much better compared with the any e-platform. Voice price is much better. 100 or 1.5 billion is nobody going to even to quote. You can have a quotation, but the price is going to be non-reasonable at all. When we're saying that there is black and white situation, we need to explain at what angle we look at this. On the market, we have a lot of corporates, not only them, who have kind of request for benchmark, for transparency, for particular number of services. Algo order is what can provide for the service, scaling up the business without investment in stuff. So such a service, which is more or less free of charge for the bank. As most of us, we use algorithms, we do understand how to work with risk, how to squeeze maximum value out of these risks on our books. But from my perspective, the technologies are so cheap right now, are so accessible right now, that it is time to share the value. And just rather than saying that we monetize a particular technology, we need to provide access to this technology. Someone sells box, someone gives orders, algo orders, someone gives input information, but it's time to share these technologies and to get the reward for a particular service and for voice solutions. Thank you. I will be brief, as we are to start a new panel discussion. We have negative things during pandemic times, but there are some positive points. We are always on time. Usually our timing is not adhered to. In brief, yes or no question concerning the plans. So, logical infrastructure, speed or intelligence for next year from the engineering perspective. Of course, intelligence for the sake of speed. Intelligence. If we just select out of two, just intelligence. In our team, we work on intelligence. Gleb? RAS? The most important thing is scaling and a big number of options, currency pairs.
Infrastructure or intelligence?
Yeah, I'd probably go for the intelligence side of things. I think that's where people and the markets are going in terms of trying to get more information and more data to drive what decisions they're taking.
Thank you. Thank you for your input. Thank you, all the participants. Thank you, all the representative of the audience. All the best to you.